agencies. But petition audits are really representative of democracy. You sign enough signatures and I come in and do an audit, and it's democracy in action, and I really like petition audits, and that's why I come to deliver them personally. In this case, the minimum number of signatures you have to have to do a petition audit is 200. Normally it's the greater of 15%. That would have only been 100 of the people who voted in the last governor's election. That would have been 176, but there's a minimum requirement of 200. In this particular case, there were 206 signatures received, and that triggers the obligation for the state auditor to come in and do the audit. The period that we audited was the fiscal year ending December 31st, 2010. That's the way we normally do it. But if we saw things that carried forward into 2011 that were relevant, we also report on those. There were about 650 hours spent doing the audit. We estimated the cost would be $35,000 to $50,000, and we expected to come in a little under $30,000. The audit was ready December 30th, but we were unable to find a mutually convenient time when everybody who needed to be here could be here, which is why we're delivering it today. We also audited the court while we were there and found a few problems with the court, but they were not major. There were some problems with the segregation of duties. But what I wanted to talk about is the audit of the actual village. And the chief petitioner provided us with a long list of concerns, and we looked at all of them. If it's not in the audit, it doesn't mean we didn't look at it. It means we either found nothing wrong, or it was so minor it wasn't worth reporting on. Ultimately, we try to focus on the big issues because there's enough big issues that we don't focus always on the small issues. We did not find any theft, but we did find some misuse of property, some of which I think was reported in the paper today. And we have a rating system that I put in place when I started. That had never been done before by the Missouri State Auditor. And every entity we audit gets an excellent, good, fair report. It's just like school. It's an A, B, a C, or a D, basically. In this case, our audit unfortunately got the lowest rating for this entity. It was a poor. And that means that there are significant, we have published criteria. That means there are significant deficiencies that are in need of urgent correction. And you can read our criteria in the audit for what gets a poor. But there are numerous findings, and we need to make sure these recommendations are implemented. So I'll go through now each of our findings, and a finding means something that needs to be fixed, basically, in audit language. The first finding we had was that the general fund of the village is in poor condition. The unrestricted balance fell from $112,000 in fiscal year 2009 to a negative balance of $25,000 in 2010, and there's also a negative balance projected for 2011. Obviously, a village like this cannot continue to function if there's a negative cash flow, and that's what we found. That was not the case even 2 years ago, and now there is a negative cash flow situation. In fact, for the last 4 years, general fund expenditures have exceeded receipts, and the leftover that was in has gone down and down until you're in negative territory now. So the first finding, and we find this in a lot of small communities, especially with the economic hard times that we have, is that you have a negative balance now, and that's got to be changed. You can't continue to operate at a deficit. The board has approved, in order to cover the negative balance, transfers from restricted funds to help the general fund. But some of these transfers were not legal or proper. You cannot take money from restricted funds, funds that are restricted by law, and transfer them into the general fund to cover the debt. That's not permitted. We found that in many circumstances. And I'll go into more detail on that in a little bit. The board approved, there were board-approved transfers that were not proper, and in some cases the village clerk transferred money from the capital improvement fund to the general fund to cover cash flow shortages. Now I'll tell you, this is a common thing. You know, it's robbing Peter to pay Paul. When you're out of money, you got to find it somewhere, so you go where there is money. But there are legal problems with that, and it's also just bad accounting. It's bad financial practice. It's not going to get the city on its feet if you're constantly borrowing from other funds to pay the general fund. Even with these transfers, even with transferring money from restricted funds into the general fund, there were 12 times when the village was charged for overdrafts on the bank account. So even those transfers were not enough to cover the deficit that the village is incurring. The village deposits motor vehicle-related fees and road and bridge tax monies into the general fund, and that might be a problem too. Some of that might go to the street fund, and driving over here tonight, definitely some money needed in the street fund. We also found the village laid off one part-time administrative employee and one full-time police officer, which probably was painful for the village, to save some money. And that could have saved $70,000 a year and actually put the village in a positive cash flow situation. But then in December 2010, everybody else got a pay raise, and that ended up increasing the payroll by $18,000. So the effect of the layoffs, if you have to go through the painful process of laying people off, there ought to at least be a financial benefit to the village, and in this case, actually the payroll now is higher than it used to be. We found that to be problematic. We had some findings relative to the treasurer's report. The Board of Trustees reviews detailed monthly financial reports, which is good. In a lot of small communities that we audit, the Board of Trustees does not review monthly financials. So it was good they're reviewed. However, there were problems with the reports that were given. Sometimes transfers between funds that I talked about, when money went from a restricted fund to the general fund, were not accurate. There were duplicate expenditures totaling almost $6,000, and the certificate of deposits were not identified to a specific fund. So another one of our findings is there has to be accurate financial information reported to the board if there are going to be financial improvements made to the village. Budgets. There is a state law on what budgets have to look like, and the state law is designed to ensure that the entity, the village, the city, the municipality that we're looking at understands how much money it has and how much money it's spending. In this particular case, the 2010 budget for the village did not contain a beginning and an ending cash balance, so you cannot know your financial condition if you don't have beginning and ending cash balances, and those are actually required by law, and they were not in there. The 2011 budget included an actual beginning for 2010 and ending cash balances, but they did not agree with the bank statements. So even where there were beginning and ending cash balances, we could not reconcile them with the bank statements that we received. There were errors in there. The budget also lacked, by law, all budgets are required to have an overview. What's the official term for that?
Budget message.
A budget message, which really means an overview of what the expected budget is, and that was not there in the 2011 budget. And on the 2011 budget, some transfers between funds were shown in the budget only of one of the funds, which means there's all kinds of opportunities for mischief. So these are pretty serious accounting deficiencies, and our recommendations are obvious based on what the deficiencies were. First of all, they need to closely monitor the village's financial condition and take the necessary steps to improve it, because you're in a negative cash situation right now. There should be long-term planning to ensure receipts are maximized and overdraft fees eliminated. I mean, you had 12 times where you paid money just because money was overdrawn in the bank account. Now, the board said they would work on those. They would try to improve the cash receipts and the handling of the money. Apparently, there's been a financial advisor hired, which is a good step to make sure that the village doesn't have these problems going forward. We want to ensure the monthly reports are accurate and complete. And the village says they're going to work with financial advisors to make sure all legal requirements for the budgets and the like are in compliance with law. And there's been a commitment made to fix these problems with the budget that we identified. So that's sort of a summary of the overall financial condition and the budgeting of the village and the problems and what we said had to occur. Finding number 2 is relative to expenditures, not budgeting, but expenditures. For example, competitive bidding. The way to get the best value for your services is to have competition. And there's a village code on that, a village code provision requiring that there's advertising for bids on items and services over $5,000. But for example, in 2010, the village did not solicit bids or document the reason why they didn't get bids for the salt spreader, which was almost $6,000, 104 tons of salt, $6,200, and insurance, which was $31,000. By your own laws and also in accordance with good fiscal practices, competitive bidding is important, and it was not occurring. We found a lot of problems with control of fuel. There were inadequate measures in place to ensure that fuel purchases are reasonable and in accordance with the law. Fuel cards were not handled correctly and were not properly reviewed. We have several examples in the audit report. I won't go through them all, but there was also problems with the way gas is purchased by people who have vehicles. Conflicts of interest. Now, I guess this was a big story in the paper today. $2,900 for the repair of village vehicles to a business owned by 2 board members. Basically, the board voted to award the business to themselves. It's a blatant conflict of interest. And we could not provide any documentation of any bids obtained during the competition, and there appeared to be self-dealing going on. And of course, that was kind of a big story independent of us. I guess the Missouri Ethics Commission found some problems with that as well as us. We found exactly the same problem. The state law and the village code are consistent that these sort of self-dealing financial transactions are not proper, and they cost the village money, and they need to stop. So our recommendation was very clear. The village needs to ensure that bids are solicited for all applicable purchases in accordance with the village code, and the board indicated that they would do that going forward. I think everybody's learned their lesson on that one because it got a lot of bad publicity for your community. We want better fuel procedures, and we want a documentation of bidding and not awarding contracts to people who are affiliated with the village or the board. The good news is the board agreed that they would do that. So U.S. citizens need to make sure that they follow through with that. Now, we have a 90-day follow-up procedure. I don't know if you know that when I became auditor, for any audit that receives a poor and some that receive a fair, we send a team back after 90 days to make sure people are actually doing what they said. So the good news is the board has agreed to do it, and the better news is we're coming back to make sure that they do. And that's a new thing I implemented when I became auditor a year ago. And you'll see us in 90 days to ensure that these things are being done. Finding number 3 relates to something I mentioned at the very beginning, which is restricted funds. And this is a common finding. You know, all across Missouri, communities are having trouble meeting payroll and their expenditures out of their general funds, and they're transferring money from restricted funds into the general fund. But that's a violation of law. Just because everybody's doing it doesn't make it right or reasonable or proper. We found that. There's a Missouri law, statute 94-577, that says, for example, all capital improvement sales tax monies can be only used to fund capital improvements. That makes sense. That's what they're for. And a capital improvement is defined as any capital or fixed asset having estimated economic useful life of at least 2 years. Land, buildings, machinery, furniture, that kind of thing, including computers. We found that some of the allocations of expenses to and the transfers from the capital improvement funds were not reasonable. They were not supported by adequate documentation, and some of them were not even approved by the Board of Trustees. So for example, salaries and fringe benefits of public works employees are allocated right now 50% to the capital improvement fund and 50% to the general fund. Well, there was no documentation as how, was that just picked out of thin air? We need to document how the allocations are going to occur, and that did not happen. More seriously, during the 3 years ending December 31st, 2010, we found several expenditures that were allocated to the capital improvements fund which did not appear to be capital improvements. So for example, $53,700 for electricity. That's not a capital improvement. That was paid for by the capital improvement fund. $21,000 for trash services. Trash service is not a capital improvement. It was paid for by the capital improvements fund. $4,600 for cleaning supplies and office supplies. Those are not 2-year items. Those are not proper capital improvements. And $4,700 for electric and water services. And there were several other ones that we found as well. And what we found is the village clerk often transfers monies from the capital improvement fund to cover the general fund shortages. And there were no records to document those transfers. When those transfers are made, first of all, they're not supposed to be made, and when they are made, they're supposed to be, it's like a loan, they're supposed to be paid back. And there was not adequate documentation for that. As of December 31st, 2010, I think the number's higher. Now, the general fund owed the capital improvement fund $70,000. That's not good accounting, it's not good governance, and it needs to change. Talk a little bit about the street fund. Article 4, Section 30 of the Missouri Constitution, that's the highest law of the state, requires motor vehicle-related receipts be dispersed only for street-related purposes. And then there's other statutes that talk about road and bridge expenditures being spent for their proper purpose and the like. What we found is the village does not separately account for motor vehicle-related fees and road and bridge taxes and cannot show that they're in accordance with the Missouri Constitution. That's serious. The Constitution is the highest law in the land. There's no documentation or accounting records that these expenditures were made in accordance with the Missouri Constitution. It looked to us like monies deposited in the general fund were pretty much just commingled with restricted funds. And there was no running balance carried of these monies, so you don't even know how much to pay them back. That's a big problem, and it has to change. The village also did not submit a road and bridge tax disbursement affidavit to the county during the audit period. In order to prove that you're complying with the law and expenditures of these road-related monies, you're required to sign an affidavit, which is, a legal document where you represent these monies are being properly spent. Well, I guess it's obvious why the affidavit wasn't submitted, because they weren't being properly spent. So it's important to fix that and submit the proper affidavit, which is required by law to show that these monies are being appropriately spent. I want to talk a little bit about the sewer fund, the sewer lateral fund. Administrative transfers from the sewer lateral fund to the general fund appear to be excessive. Now, this wasn't a big amount of money. It was, I think, $2,500 per year, but it didn't look like that was justified according to our auditor. So that needs to change as well. Okay, what are our recommendations? You probably can tell what they are. Make sure that restricted monies are spent for the restricted purposes, and do not transfer back and forth or use them as a piggy bank for shortages in the general fund. All these funds have to stand on their own, and they have to be solvent on their own, and you can't move the money back and forth. And we have 3 or 4 very specific recommendations in the audit about how to improve that. The reaction of the board was they agreed with the recommendation. They instructed staff and the financial advisor to implement these recommendations, to keep segregated funds segregated to their proper purpose. And as I said, I promise you, we'll be back in 90 days to make sure that they're doing it. Finding number 4 related to payroll procedures and personnel policies. Segregation of duties is very important. The way money gets stolen, and we did not find evidence of stolen money, but the way it can get stolen is one person has all the duties relative to payroll because they can manipulate the numbers. We found that the village clerk receives and posts time cards, and there's no independent review. Good accounting practices require that there be an independent review so money is not stolen, and we found that was not right. We also found some problems with the time summaries, which need to be improved as well. There's no backup documentation for time spent in court or training, and there are numerous other problems with the time summaries. So it's very, very important that that be covered, because we need to make sure people are working the number of hours they say they're working. And that requires segregation of duties and supervisory review. We also found problems with the personnel policies. Employees are allowed to accumulate negative leave balances, which is not permitted by village policy and is contrary to good financial practices. So, for example, one employee was allowed to take 59.5 hours of unearned leave. And then there were various transfers of sick leave and other leave to try to cover that. That's not permissible. There's no documentation to show that this was done properly, and Village Code number 501 does not permit it. Compensatory time. The village does not comply with village policy regarding comp time. Village policy is very clear that comp time is earned for hours worked over 40 hours per week. It's a week analysis done on a week basis. What happened is they were being given comp time if they worked in excess of 8 hours a day. So if you worked 10 hours one day, you were given 2 hours of comp time, even if you only worked 3 or 4 hours the next day. So that was a violation of village policy relative to compensatory time. And village policy does not address how the leave taken affects compensatory time or which people are exempt from overtime. And that needs to be stated more clearly as well. There's another problem that this policy that I just mentioned is actually a violation of federal law as well. Village policy states that compensatory time is earned at a rate of 1 hour for every additional hour worked over 40 hours in a 7-day week. But federal law requires employers to pay overtime or comp time at a rate of time and a half. So here's a situation where people are actually probably underpaid, but there's a federal law on that needs to be complied with, and it was not. Our recommendation would be obvious again from the finding. You can pretty much predict what I'm going to say. The Board of Trustees has to review and approve all payroll registers. And they said they would do that. Employees have to prepare and submit time records for actual hours worked, signed by the employee, approved and signed by the supervisor, and filed with the village clerk. And they said that's actually already been implemented since we've done the audit. Employees should not be allowed to use unearned leave. And overtime policies and compensatory policies have to be in compliance with village policy and federal law. And the board has said that they've now implemented that, and those things have been changed, and that will be improved. Finding number 5 is the sunshine law. You all are here because you care about your community. That's why there's an open meeting requirement. There are only a very small number of exceptions, so there can be a meeting which is closed and you don't get to know what happens. We found that from January 2010 through April of 2011, the village did not document the reason for closure of meetings of 3 of the 12 closed meetings as required by law. Now, 9 of them, there was a proper closure of the meeting based on our finding, but in 3 cases, we did not understand why you were not given access to those meetings. Now, I will tell you, it's a very common occurrence. People like to kind of keep things secret when they're dealing with community governance, but that's not allowed under Missouri law, and we wanted that changed. So, sunshine law violation is the 5th finding. There are also some issues with closed records. Village personnel indicated that employee time cards and position status are closed records not available to the public, but the village policy doesn't say those are closed records. And if they're not stated as closed records, you should have access to those records. So there was a problem we found with closing of 3 meetings that should have been closed and denying access to the public to certain records, which appears that you should be getting access to. Our recommendation was to ensure that meetings are properly closed, if they're going to be closed, that they're carefully documented as to why they were closed, and the board's response is that they will make sure that happens. That's a summary of what we found. Now, I know you had some other issues you were concerned about, and we looked at those and didn't find anything seriously wrong, but these are all big problems. I mean, you're talking here about an audit that found a number of problems in almost every area that we looked at, and we're hoping that the village will make the corrections. And I just gave a summary, but there are other problems other than the ones we talked about. But basically, you have problems in financial condition, reports, budgets, expenditures, big problems with restricted funds, payroll procedures, personnel procedures, and the sunshine law. And I promise you, I'll be back in 90 days to make sure people fix those. Thank you for coming, and I'm happy to answer questions. If I can't answer, we have our auditors in charge who will be able to answer. Thank you very much.